Good afternoon, traders. I'm Michael Sabo, Senior Market Strategist with RJO Futures in Chicago on June 18th, bringing you some afternoon commentary in the energy market. So let's get started. Crude prices right now, the August contract, touch weaker, trading around 105.80, down about 19 cents. Brent heading in the opposite direction. Right now we're up about 83 cents at around 114.28. Take a look at the Brent WTI spread. I've talked about this in some of the prior posts here. Starting to see that widen out a little bit. Looking at nat gas, off about 4 cents, touch weaker. Complex firmer heats up about 2.5 cents, and the RBOB's up about a penny. Now, we did have EIA data come out this morning, and it did show a draw in the overall stockpiles of oil of almost 600,000 barrels, but way off the mark. API yesterday was looking for a draw of over 5 million barrels. And of course, coming in, traders this morning were expecting to see in that EIA report a draw of 750 to a million barrels, only came in around 600,000. So although it was a draw, nearly wasn't what traders were anticipating. My opinion, actually slightly bearish because the draw wasn't as large. Now, taking a look at crude prices and where we've kind of been here recently, obviously I think we're seeing a lot of fear premium being built into the market. I've talked in prior posts about geopolitical events that could potentially change the overall picture in oil. And if you look at oil prices here, back on June 5th, August oil was trading of a low here of around $101 a barrel. That market was kind of starting to round back over, losing some of its upside momentum. And then we saw kind of a lot of this news that started coming out in Iraq and the problems developing there, which have escalated quite rapidly. And since that time, we've seen oil prices jump almost up about $6, hitting a high on the 13th of around $106.84 a barrel. Now, since that time, we've actually seen a little bit of an inside day on June 6th. Well, June 16th was an inside day as that market, a little tight range there, some consolidation. On the 17th, we saw that market break, and we're trading a little bit lower now. If you take a look at the chart patterns there, the daily price action, starting to see some lower highs and lower lows, which is suggesting to me this market could be setting up here for some downside action. Now, we have to watch still, what's shaping over in Iraq and how that has the potential to develop if it draws the U.S. in a little bit deeper. And as I say, if bombs start being dropped, that could certainly shift things in the short term. But I do think there's a lot of fear premium in that market. And I think there's some great strategies to potentially play this thing on the downside or on the upside. Looking at the overall total stocks, and I've mentioned it in so many of these posts, I think we've got plenty of oil out there right now. And so I personally believe that oil has the potential here to sell off, but not without a fight. Oil is one of those markets that just doesn't cave in here. And then you get a geopolitical event like we're seeing here in Iraq, and it can cause prices to jump up. So it's really important the type of strategy that you're using to play this market, whether you're a bull or a bear. Give me a call. We can get into a little bit more detail. Got a put ratio spread that I can talk to you about, explain to you the dynamics of how that works.
Futures and options on futures may involve substantial risk and may not be suitable for all investors.